This is the Stock Track project presented to you by Amandeep Sangha and Erica Torres. Our philosophy in this project was mostly conservative investing. We chose to take this route after our first two risky investments that caused us a great loss. Our strategy was to invest in stocks with a beta lower than 1, which meant that the investment was less risky. Our goals for this project was to beat the market by yielding a higher return of our portfolio with a beta of 1. We had no previous knowledge of the investing world. StockTrack was a new experience and exposed us to the stock market and tactics to invest and have a profitable outcome. When investing, we took a look at the beta. As a conservative group, we took a look at the betas for lower than 1. We also took a look at the PE ratio, which is the company's current share price compared to its per share earnings. We also took a look at EPS, which stands for earnings per share, and also the estimated return and risk, which were calculated during the week when we invested. The stocks we invested were Tokai Pharmaceuticals, Hong Kong High Power Technology, Bank of America Corporation, Dresser Rand Group Inc., Sigma Aldrich Corporation, eBay Inc., CareFusion Corporation, HCA Holdings Inc., Southern Company, BlackRock Municipal Income Trust II, Easton Vance Massachusetts Municipal Bond Fund, and Apple Inc. Tokai Pharmaceuticals was our first stock we bought, shares of 500, purchased at a price of $25.81. The beta was not given, weight was 60.04%, selling price was $16.52, and there was a loss of $4,645. This was definitely our first risky investment. Hong Kong High Power Technology was bought at a price of $7.47. We bought 1,150 shares. The beta was 2.12, weight was 39.96%, selling price was $6.60, and there was a loss of $966. This was our last risky investment, and we learned after this big loss that we would rather take the conservative road after experiencing our first two huge losses. Our next stock was Bank of America Corporation. We bought shares of 10, purchased at a price of $17. The beta was 1.59, weight was 1.13%, selling price was $17.04, and there was a loss of 60 cents. We were making money at first, but we took too long to sell it, and that's why we lost 60 cents. Our next stock was Dresser Rand Group Inc. We bought 100 shares, purchased at a price of $81.97. The beta was 0.5, weight was 53.94%. Then we saw that we were making money, so we purchased 150 additional shares at a price of $82.48, and we sold them together for a price of $82.20 with a profit of $19. This was our first profit, and we were very happy that we were learning from our mistakes. The next stock we invested in was Sigma Aldrich Corporation. We bought 50 shares, purchased at a price of $136. The beta was 0.43, weight was 44.93%, selling price was $135, and there was a loss of $32. Then we decided to buy 20 more shares at a price of $135. The beta stayed constant and the weight was 21.14%, and the selling price was $134. With a loss of $28. We decided to purchase additional shares because we were at a profit and felt confident that we could double our profit, but it wasn't the case and we lost $28. Our next stock was eBay Inc. We bought 25 shares, purchased at a price of $55. The beta was 0.81, weight was 100%, selling price was $54, and there was a loss of $32. We let it sit for a while and sold it too late. That's why we were at a loss. Our second stock was CareFusion Corporation. We bought 50 shares, purchased at a price of $57. The beta was 1.11, weight was 22%, selling price was $56, and there was a loss of $12. It was at limbo, making profit one day and losing another. So after 2 consecutive days at a loss, we sold it before our loss was greater. Our next investment was HCA Holdings Inc. We bought 50 shares, purchased at a price of $71. The beta was 1.37 and the weight was 27%, selling price was $70, and there was a loss of 33. We should have looked at the beta and paid more attention to it because it was slightly high. But the loss wasn't huge, and we were still improving our investing skills. Our next investment was Southern Company. We bought 50 shares, purchased at a price of $44. The beta was 0.26, weight was 17%, selling price was $47, and there was a profit of $145. The beta was really low at 0.26, and we were very happy that we were improving our investing strategies. Finally, a profit. Our next investment was Easton Vance, Massachusetts Municipal Bond Fund. We bought 55 shares, purchased at a price of $15.14. The beta was 0.5, weight was 5.89%, selling price was $14.80, and there was a loss of $17. Our next investment was BlackRock Municipal Income Trust 2. We bought 50 shares, purchased at a price of $15.60. The beta was negative 0.26, weight was 5.89%, selling price was $15.53, and there was a profit of $19. Our next investment was Apple Inc. We bought 200 shares, purchased at a price of $102.24. The beta was 1.26. Weight was 100%, selling price was $107.25, and there was a profit of $3,002. This was our last investment, and we were very proud of ourselves, finally making a huge profit. This proved that we had improved our skills dramatically and had better knowledge and understanding of the investing world. Our outcomes were our overall portfolio return was negative 2.42%. Our portfolio value was $97,579. But there was an overall loss of $2,857. Unfortunately, our last profit of the Apple Stock Inc. couldn't bring us up to an overall profit. Our first two investments were risky and cost us a huge loss that drained our account. The lessons that we learned during this project was just because beta is less than 1 doesn't mean that it will guarantee you a profit. 2 was that we learned that we can't depend on luck for a stock to make profit. And 3 was communication is very important within a team members. You have to research as much as you can of a company's stock. For example, Apple had the iPhone 6 debuting, and that's what everybody was talking about in the media. So we decided to invest in it, and we were very happy with our profit. We also learned that communication is important within team members. Overall, it was a good experience, and we had fun investing and learning about the stock market.